Welcome back to Coinblah. Imagine walking past a pile of money. We're talking $2.5 trillion just sitting there, left on the table every single year. It simply vanishes because the global banking system is too slow, too outdated, and honestly, too scared to pick it up. Today, we are diving deep into a project that just made a massive move to capture that value. We're breaking down the XDC Network and its game-changing partnership with the Australian trade giant, the Murundi Group, which was officially announced just last week. We are going to unpack why your morning cup of coffee and a simple bowl of rice are about to become the most critical assets on the blockchain. We'll also look at how the recent Cancun upgrade fundamentally changes XDC's tokenomics and what this means for the future of real-world assets in 2026. This is the analysis you need. Let's get into it. To really get the weight of this news, you have to understand the villain in this story. It's called the trade finance gap. As we sit here in late 2025, reports show this gap has blown up to a staggering $2.5 trillion. That's trillion with a T. Think of global trade like the most exclusive nightclub in New York. The big players, Amazon, Walmart, the massive conglomerates, are the VIPs. They walk right past the velvet rope and get free drinks. But the small and medium enterprises, they're stuck waiting in the cold. These smaller businesses have the goods to sell, and they have buyers lined up, but the bouncers, which are the banks, won't let them in. Why? It comes down to three frustrating reasons. First, the background check costs too much. It costs a bank more to verify a coffee farm in India than the profit they'd make on the loan. Second, regulatory panic. Strict laws make banks incredibly risk-averse. They would rather say no to a legitimate business than risk a slap on the wrist from regulators. And third, we have the paper anchor. Even in 2026, we're still relying on physical stacks of paper for invoices and shipping manifests. This gap represents lost growth, but for crypto, it's the biggest opportunity since Bitcoin. This brings us to the breaking news from January 23, 2026. The XDC Network has officially signed a strategic partnership with the Murundi Group, a heavyweight in the agricultural sector. This isn't just a fluffy press release, it's the real-deal implementation of MLETR standards. If you don't know the acronym, it stands for the Model Law on Electronic Transferable Records. Basically, it makes digital files legally as good as paper. Instead of mailing a stack of documents from Mumbai to Melbourne, which takes days and can get lost or forged, the Murundi Group is digitizing everything on the XDC blockchain. Picture a digital container that holds the legal title, financing data, and tracking inflow. Because it's on the blockchain, it's immutable. It can't be faked. This gives banks the confidence to lend money instantly. The bouncer suddenly opens the velvet rope because the ID is verified by an unhackable system. Why does this matter? Because they're focusing on high-frequency commodities, rice and coffee. These aren't luxury condos that sell once a year. These are goods that move every day, creating constant, reliable network volume. Now, let's zoom out to the macro picture. The timing here is no accident. As of January 1, 2026, under the Economic Cooperation and Trade Agreement, Australia has slashed tariffs on 100% of Indian imports. They're aiming for 100 billion Aussie dollars in trade by 2030. The corridor between India and Australia is arguably the hottest economic zone on the planet right now. In 2025, India's coffee exports jumped over 22%, hitting $2 billion globally. But specifically to Australia, transaction volumes skyrocketed in 89% in the first half of last year alone. This is the perfect storm for XDC. You have free trade policies opening the floodgates, demand for Indian commodities exploding in Australia, and now the blockchain rails to handle the heavy lifting. Starting this quarter, Murundi begins processing these shipments on-chain. Now let's talk tech, because the business model means nothing if the engine is broken. On January 15th, XDC deployed the code for its Cancun upgrade. It's set to go live on the mainnet around February 1st. This is a massive evolution. The headline feature here is EIP 1559. If you know Ethereum, you know this. Previously, transaction fees went entirely to validators. Now, a chunk of every fee is permanently destroyed or burned. Think of it like a toll road where half the coins paid are melted down immediately. With the Murundi Group moving thousands of tons of rice and coffee, every document created and every loan issued burns XDC. If network activity hits the right level, XDC flips from inflationary to deflationary. The supply literally shrinks as the network gets used. The upgrade also introduces Blob transactions. It sounds funny, but it's crucial. It lets the network attach large chunks of data, like complex trade docs, at a fraction of the cost. It keeps the network cheap for businesses while making the token more valuable for holders. So, what is the investment thesis here? In crypto, we get distracted by shiny objects, but in institutional finance, utility is king. The demand for the XDC token comes from two places: gas to pay for the network and collateral for liquidity. Through apps like TradeFinex, XDC acts as the settlement layer. Plus, institutional investors love XDC because it's ISO 20022 compliant. It speaks the same language as SWIFT and global banks. It's basically the Android of trade finance, open but compliant. Looking ahead, the roadmap is aggressive. By the second half of 2026, the Murundi Group plans to expand beyond food into textiles, specifically cotton. That expansion alone targets about $120 million in trade volume. By 2027, if this pilot works, they plan to copy and paste this model for supply chains going to the US and Europe. We're looking at a potential volume exceeding $500 million annually from just this one partnership. Industry data suggests blockchain reduces trade finance costs by 40%. In a low-margin game like commodities, a 40% savings isn't just nice, it's survival. Once competitors see Murundi's margins, adoption won't be optional anymore. To wrap this up, XDC isn't just another coin. It's positioning itself as the digital infrastructure for the physical world. Real-world assets aren't just about tokenizing a Picasso painting. The real money is in what people consume every day. With the Cancun upgrade providing the engine and the Murundi Group providing the fuel, 2026 looks like the year XDC proves the $2.5 trillion trade gap can be closed, one block at a time. Keep your eyes on the data, not just the charts. Thanks for watching Coinblah.